Skip the bears, that's the read for Wednesday morning. The markets basically ripped. When I say ripped, they've kind of glided higher in fairness. They ripped on Monday and they saw some follow through on Tuesday. We've closed June with an absolute corker, and some of the indicators that we look at are now in the bullish extreme zone, so there's quite likely more to follow. So here's what we're watching for Wednesday. So we're going to be looking at why the S&P is trucking along the upper Bollinger Band, why the Russell's Bollinger Band pinch is setting up for Wednesday's breakout, and how the premium poppers have bagged a double on SPX and the Russell. Also, a quick note, at the end of June, beginning of July, we're going to see a shortened trading week. Obviously, 4th of July weekend lands on the Saturday, so the Friday and the Monday are going to be a holiday. So we've got a 4-day weekend, which is awesome. So the overnight tape, not quite the overnight tape. I'm actually doing this on Tuesday ahead of Wednesday. I'm going to be away from the desk most of the day Wednesday. Basically, the markets are up. We can see a little bit of a wick on the upper portion of the S&P. They're not really there on the other indexes, but the NASDAQ is leading the charge to what could be new all-time highs, as is the S&P. Sleepy Uncle Dow and Uncle Russell, they're kind of just grinding sideways for the moment still. The VIX has fell off the cliff there, and fear is completely evaporating out of the market, at least from the viewpoint of option pricing volatility, which is essentially what the VIX is. Gold's attempting that push lower. Maybe we're going to get the turnaround. I think I'm still looking above 4,100 for a potential bullish idea, but again, I completely misread it. And certainly with hindsight, the bear pushed down from 4,400 down to 4,100. It's kind of clear, but just trying to buy support, and in this case, it's just finding support a little bit lower for the moment. Over on crude, we can just see that we are making what I call like a Russian doll type pattern. It's just inside bar, inside bar. And these usually lead to quite explosive movements, and we can see Bitcoin at the bottom there attempting to push to new lows. If we can break that 58,500, as we've said on past recordings, then we will see 50,000 and possibly even lower down to 40,000 as a possibility. Looking at the details in a bit more looking at the specifics in a bit more detail, in a bit more specifics, I don't know, however we want to say that. The S&P keeps on trucking. We've basically seen our tag and turn setup with a lovely V-shaped entry, which gave us a nice plus setup, above average setup is what the system is saying. And what we're seeing here is what John Bollinger calls riding the Bollinger Band. And it usually starts with these, I suppose it's a little bit hard to read these W bottoms essentially, but you've got that higher low, you've got the V-shaped entry which the software has flagged, and ultimately we can see that that's exactly what's going on. What we do have now here is the MACD is in the bullish extreme. It's above plus 140 here, and for the last 21 years on of data that through the research basically suggesting that this is actually a continuation pattern 74% of the time. So what we want to be doing is any bearish tag and turns, we want to ignore them or keep them on a tight leash. Now there's none setting up right now, but if we do see one while we're in that bullish extreme situation, again, we want to ignore them, and if we do take them, we want to keep them on a very tight leash like we did last time. Uncle Russell is, again, we've still got that Bollinger Band pinch point. We can see that the previous trade was skipped. The system is flagging off the bearish tag and turns, but as we said yesterday, I generally like to wait for the breakout when this happens, and I'm going to work to integrating this decision so that it's automated, and you'll see it appear here in the expert advisor. There's obviously a lot of programming coding goes into these things, so I tend to do things in stages, but that should be an automatic decision as well. Looking at the premium popper setup, which is the collect morning income. We've looked at the collect weekly income from swings and the collecting morning income. On the S&P, we can see that we had a very clear breakout, first breakout, and a technically it's the second trade, but technically it's a third breakout, just with the way that I've coded these things. We didn't actually have the rather cleverly named second breakout, but ultimately we can see a very clear, easy setup, breakout, retracements, and then push to a new high, which is looking great. The Russell was the same, again, very clear breakouts. First and third, a little bit of a retracement down to the VWAP. One or two of the members did report getting the VWAP trades. I chose not to, but ultimately a very easy plain sailing day with multiple trading opportunities. Ultimately, the S&P is just riding the bands. We want to be skipping the bears, stay with the trend. That's the playbook. And the day trades, just trade the setups in the morning when they settle. So if you want to collect morning income or you want to collect weekly income, check out the links in the description. Again, we've been talking through the system and the software during these analysis videos, but if you want to learn a little bit more about it, again, just check out the links. And that's it for the moment. As always, less brain means more gain. I'm spending most of my time trying not to think about the analysis and just try and codify the decision-making process, which is what the software does. The tag and turn system now looks at 30 plus different variables in the background, and practically to do that manually, even just a handful of them, it can be a daunting task, a time-consuming task, and now, quite literally at the click of a button, or not even click of a button, just load it up as the one button you've got to push, and it's done for you. So that means that all my trades can be smoother than a cashmere codpiece. At least hopefully that's the idea. So that said, I'll see you on the next installment. As I said earlier, I'm away from the desk most of Wednesday. I'm off to a little bit of a music festival, so that's what I'll be doing with my day. And maybe I'll take a little bit of a sneaky look at the charts, or maybe I won't. It depends on how the day is going, but I will be checking in via the mobile on Wednesday session. So that's all, folks. I will speak to you again on Thursday now.